Good afternoon. My name is Julie Snow. I'm going to be moderating today's webinar. We will be talking about how to pass the CMA exam, insights, tips, and advice from Professor Steve Smith. Next slide, please. Before we jump in, I'm just going to make a couple of housekeeping announcements. Everyone in attendance is in listen-only mode. That said, we would love to hear your questions, so please use the questions box to submit your questions during the webinar. We've devoted some time at the end specifically to answer all of your questions, so be patient. We will get to your questions, and any questions that we maybe don't get to, we will follow up with you by email. You may download a copy of today's slides in the handout section, so be sure to do that. And finally, today's recording will be emailed to everyone who registered for this webinar within 24 hours. So keep an eye on your inbox for the recording. Next slide, please. All right, I am delighted to introduce your instructor today, Dr. Stephen Smith. Steve is an associate professor of accountancy at the Marriott School of Business at Brigham Young University, BYU. He received his BS and MAC degrees in accounting from BYU, as well as his MS and PhD degrees in management from Cornell University. Steve teaches management accounting courses in the undergraduate and graduate programs at BYU, and he's received numerous teaching awards for teaching excellence. He's also the lead author and lecturer for the Wiley CMA 11th Hour Final Review. Welcome, Steve, and I'm going to go ahead and pass it over to you.
Okay, Julie, thank you very much. I appreciate it. My friends, it's great to be with you today, and I want you to know before we start that I'm a believer. I think the CMA exam or CMA credential is an outstanding feather in your cap, and I mean that for lots of reasons. I think the exam is well designed in its structure, but more than that, I think the topics that are tested on the CMA exam are all sort of chosen extremely well. I tell this to my students all the time. I think if a CFO looks at all the topics tested on the CMA exam, he or she is likely to say, I want all of those. I want people on my team to have skills in all of those areas. So I think it's a well-designed exam and a well-established credential. And I've been a CMA for about 7 years, and I haven't regretted it a single day. So I commend you, I honor you, and I'm excited on this journey with you. I also want you to know I'm a believer in Wiley. I've been a Wiley author for a number of years, and I think that the Wiley products that we have for all the exams, but the CMA exam perhaps in particular is outstanding. And so I'm delighted to be here representing Wiley as well as the CMA exam. I'm going to give a brief overview today of the exam, very brief, because my expectation is that most of you are already somewhat down the road. You're beyond the point of sort of thinking about it, want to learn a little bit about it, maybe make a decision about it. We're sort of past that. So I'll talk about it, but not very long. And then I'm going to talk about some test taking tips, some basic tips and reminders that might be helpful to you. And then I'm going to spend most of my time working some practice problems that reflect what you might see on the exam and how I would go about solving those. And then we'll talk at the end about how Wiley might be able to help with my specific product as well as some of the other products that are available. And we'll have some time for Q&A at the end. Just by way of reminder, the CMA exam is a two-part exam. Each part is 4 hours long. 3 hours are given to answer 100 multiple choice questions. That's 75% of the exam. The final hour is given to each participant to answer 2 essay questions at 30 minutes each. A passing score is 72% or higher. And then, of course, there's a host of other questions, I believe, all of which can be answered by tooling around on the IMA website at this link that's given here, and we can move on from there. Here's part one. Here's the breakdown of part one. 6 different topics. It's called Financial Planning, Performance and Analytics, and you can see there that for the most part, some fairly traditional cost and management accounting topics are in there, as well as sections on internal controls, and then technology and analytics. That was just added a few years ago. You can see in that right column that each of these is designated as level C, and all that means is that each of these topics is going to be tested at a level that assumes or that wants to assess each participant's knowledge, comprehension, application, analysis, synthesis, and evaluation. In other words, there's level A, in which they might just test, do you comprehend some things? There might be level 2, in which they want a little bit more. Each of these topics is going to be tested at level C, meaning all the way through to, can you synthesize some of the knowledge in these topics and evaluate it. And so deeper levels of comprehension is basically all they're signaling there. Part 2 is called strategic financial management, another 6 topics there. You can see that these also have some traditional management accounting topics, but also other topics like financial statement analysis and corporate finance, as well as a section on ethics. I usually tell my students to wait until they've taken a corporate finance class as part of their undergraduate or graduate programs before thinking about part 2. But also those topics are all tested at level C. So there's a sort of a deep level of understanding that is assumed or tested there. All right, test taking tips. Again, nothing earth-shattering here. My first reminder or tip is to manage your time. You have 180 minutes to answer 100 multiple choice questions. That's 1.8 minutes per question. That's not all that helpful, but does give you a little bit of a guidance. Far easier for me when I was taking the exam was to think, am I on pace to answer at about 33 or 34 questions per hour? So at each hour mark, I was able to get a good sense of whether I was on track or not. I was able to finish all 100 questions in 3 hours, but I will tell you that I did feel time pressure, and I went basically all the way to the end. So you do need to watch the clock. You do need to be mindful of that all the way through. Next tip is to read all choices carefully. Some questions you might look at and say, I'm going to try to answer the question before even reading the choices, and then I'm going to get my answer. I'm going to look at the choices. I'm going to feel really good. And it might even be worth it to me to not look at the choices before I even have a go at the question. But it's also worth remembering that sometimes you can look at the question and then it might make sense to look at the choices and see if some or maybe even all but one of those choices can be eliminated based just on the language of the problem, in which case you could save some time there. So some options can be eliminated early, and we'll see some examples of that in the practice problems I'm going to work with you here in a minute. My next tip is to answer every question. Some exams do penalize for wrong answers, but my understanding is the CMA exam does not do that. There's no penalty for wrong answers, so there's no incentive to not at least make a stab at every question. Some test taking tips include a pointer like, hey, when in doubt, answer C. I don't know that I'm a believer in that, and I don't think it would do you any good on the CMA exam because all the multiple choices are randomized. So I don't think there's any real value in trying to be strategic in which choice to make if you do find yourself having to guess, just for whatever that's worth. And then to make sure you're answering the right question. It's not uncommon to give a really great answer to the wrong question, and then darn it, you're out of luck, and you've really thought about it, but you haven't read the question correctly, or you haven't read the choices correctly. So be careful that some choices might be correct, but off topic, or they're correct about something the question's not asking about. Others are only partly true, right? And there's a more correct answer somewhere in there. Look out for unnecessary information. CMA exam, I don't think, tries too hard to trick you, but they do like including a sentence or two in some problems that in the end are just not relevant. You just don't need them. And if you're not careful, you might think, well, it's in here, I must need it. I must have to include this number or this piece of information. And maybe you do, and maybe you don't, but watch out for that. And then watch out for not. And what I mean by that is some questions are going to be, which of the following is not accurate, or which of the following would not be true. And you want to make sure you're answering the right question there. So watch out for that. A couple more. Don't overanalyze. As I just said, it's not my experience that the exam tries to trick you too much. Again, they may throw in some unnecessary information. You can call that trying to trick you if you want, but I don't see too much of a need to sort of overanalyze or overthink. Most of the questions, again, in my experience, are fairly straightforward. With respect to the essays, general tips are to keep it organized. I think that goes a long way in persuading those that grade these essays. Include an introduction, include a body, include a conclusion. All of these are by necessity going to need to be brief, but the more you can organize and structure in a way that's easy to consume, the better off you're going to be. Use keywords from the question in your solution. Make sure that the reader knows that you are not just off in Neverland answering a question that you thought was asked and not the one that was asked. And a big part of that is to use words and language from the question in your solution. The overall key in the essay, in my opinion, is to show the reviewer, the grader, that you understand how concepts tested on the CMA exam can be applied to real business situations. If you can convey that, then I think that goes a long way to getting a good score on those essays. Above all is to have confidence, to remember that you've done the work. You belong here, you can do it. I really believe that goes a long way in avoiding some of the stress and anxiety that can really bog you down in the exam. Just power through and remember that you're taking this exam because you've prepared for it and you're ready for it, and you belong here. All right, let's press on and look at some specific topics. I'm going to talk a little bit at the end about my particular product, which is called the CMA 11th Hour Review. And basically all that product is me giving tips and reminders and then working practice problems on a host of what I call hot topics that are challenging, common on the CMA exam, that sort of thing. And I'll show you that list here at the end. But I'm going to give you a small sampling of that here. We're going to look at, with respect to part one, we're going to look at a couple of problems on job order costing and overhead allocation, just to make sure we're in good shape there. And then sales and direct cost variances. Both of those are very common topics that are likely to be tested on the CMA exam. And then a couple of part two topics, bonds, and then marginal analysis or relevant information problems. And we'll talk about those. Okay, so I'm going to give a couple of reminders, pretty basic reminders, and then walk through a couple of practice problems just as a way to show you common problems that you might see and how I would go about solving those. Okay. All right. So a couple of reminders on our first topic, job order costing and overhead allocation. Important to remember that what's often tested is what's called normal costing as distinct from actual costing. And under normal costing, what we take is these overhead costs and we don't charge them into production as they arise. Instead, we apply them using some rate that we have computed before the period even started. That predetermined overhead rate requires us to budget what the overhead costs are going to be, again, before the period even starts. That's going to be our numerator. And divide those by some expected volume or activity of a particular cost driver, a driver that we hope is one that actually has some relationship with those overhead costs. And that's going to be our denominator. And then we're going to apply overhead, and it's going to be wrong because it's based on estimates. And then at the end, we're going to have some settling up process, right? We're going to have over or under applied overhead that we're going to have to deal with. Usually we deal with that by simply closing it out to cost of goods sold, but we don't always do that. There are some other options. One is that you could prorate that over and under applied overhead, close some of it to cost of goods sold, but some of it to the other accounts as well, the other inventory accounts. Or we could use actual costing. We could just go back and rerun everything as if we knew exactly what the overhead rate should have been. and then there is no over and under applied overhead to even worry about. Let me show you a couple practice problems that you might see. I would consider these fairly simple, shallow end of the pool type problems, but just as a way to get a little bit of contact with problems you might see on this topic. All right, here's one. Let's read this together. Barnes Company applies overhead on the basis of machine hours. In other words, machine hours is the driver. Given the following data, compute overhead applied and the under or over application of overhead for the period. So then we're given the estimated or budgeted overhead costs. That was what we came up with before the period even started. And then it appears that we incurred actual overhead of $2,970,000. And then we have estimated machine hours of 300,000 and actual machine hours of 295,000. Well, I'm not even going to look at the answers. I'm just going to go ahead and start calculating. And because I know I'm going to look for over and under applied, or the amount that I applied, I'm going to start by computing that rate. And I'm going to remember that the budgeted overhead rate is that budgeted overhead divided by the expected driver activity. Well, that's straight from the problem. I expected overhead to be $3 million. I expected to use 300,000 machine hours. One over the other means I'm going to apply overhead at $10 per machine hour. Okay. Well, what does that mean? Well, the period's over and I used actual machine hours of 295,000. That times the $10 per hour gives me applied overhead of $2,950,000. Great. So I'm halfway there, right? But the problem asks for two things: how much was applied, and then how much was over or under applied. Well, to do that, I'm going to compare that applied overhead of $2,950,000 to the actual overhead of $2,970,000. And it looks like I came in under. I under applied overhead to the tune of $20,000. Well, if I take that $2,950,000 of applied, the $20,000 under applied, and now I go and look at the answers, and there it is. Answer C is the answer, and that's the answer. Now, is there another way I could do this? Yeah, I'm a big fan of T accounts. So what if I build an overhead T account and said, okay, I know that on the left side is where I'm going to book my actual overhead costs. That's $2,970,000, which the problem gave me. I also calculated applied overhead of $2,950,000. So I must have a debit balance of $20,000, which means I under applied overhead by $20,000. And I could look at it that way. You might find that an easier, sort of more visually helpful way to get where you want to go. Either way, you get to the same place, and the answer there is C. As I said, I think I consider this fairly an easy problem, sort of a shallow end of the pool example here. All right, here's another one. Stalk Products has $27,000 of underapplied overhead at the end of the year. Management has asked you what the impact on income will be if you prorate the underapplied overhead to the appropriate accounts. What will you tell them? So a couple of things to notice here. One is management wants to know what would happen if we prorate the underapplied overhead to the appropriate accounts. Well, prorate instead of what? Well, here's where the options themselves sort of help us. If we prorate instead of, it appears, doing what maybe we would normally do, which is simply close that underapplied overhead directly to cost of goods sold. So that's what we're going to compare it to. The other thing I want you to notice is that there is no dollar amount in any of the options. And what that means is the problem is not looking for a specific dollar value impact on income. It's looking for a directional impact on income. So the truth is, it doesn't even matter how much overhead was underapplied. The $27,000 is irrelevant. It just is a more conceptual question that we're answering here, and the choices help us to know that. So here's how I'm going to show you what I would do there. I'm going to build 4 T accounts, one for overhead, one for work in process inventory, one for finished goods, and one for cost of goods sold. So we're going to start in the world where I have actual overhead on the left, applied overhead on the right, and it appears that I have under applied overhead to the tune of $27,000. But as I said, it doesn't really matter. What does matter is that it's under applied. And so at the end of the period, I need to close that overhead. I need to close it out, and I'm going to do so with a credit entry. Well, the debit entry in the simpler world is simply to cost of goods sold. So we close the entire amount to cost of goods sold. Under applied overhead means cost of goods sold is too low. So correcting it pushes cost of goods sold up and thus pushes income down. Great, great. But what we want to know is what would be the effect if we did something different? If we instead prorated that under applied overhead to the appropriate accounts. Well, what that means is if we recognize that by under applying overhead, we have miscosted units. It's possible that all of those miscosted units have been sold, but it's more likely that some of them have been sold, but some of them are still in finished goods, and some of them we're still working on, and they're in work in process inventory. So it's possible that a more accurate way of closing this out is to prorate that amount of under applied overhead, some to work in process, some to finished goods, and some to cost of goods sold. Now, again, the way to do that is not relevant for my purposes here. All I need to know is that in this new world, I'm going to close some of that amount to WIP, some of that amount to finished goods, and some of it to cost of goods sold. But because I'm closing some of it and not all of it to cost of goods sold it has the effect of pushing cost of goods sold up less and thus income down less than in the world that I lived in previously, where I closed it all to cost of goods sold. So conceptually, that helps me get to a recognition that if I prorate it, the effect on income will be that it will be higher. And that is actually answer A. Yes, income will be higher if the underapplied overhead is prorated than if it is closed to cost of goods sold, because I'm going to park some of that underapplied overhead on the balance sheet rather than sending it all to the income statement through cost of goods sold. So A is the answer there, and that's just that's a helpful visual way for me to conceptualize how that works. All right, here we go. Topic number 2. Standard costing and variances. Now, this is a topic that is, I can almost guarantee it'll be tested on the CMA exam to some extent. It can induce a lot of stress because it can feel like there's a lot of moving parts, and that the computations are not so easy. So let's talk a little bit about it. Here's some reminders. The first thing is, if you're asked to compute a variance, think carefully about what each variance means. What is varying? What dial is turning? Ideally, if I'm asked to compute a variance, I'm being asked to compute the difference in cost or revenue when I vary only a single variable, right? Or I turn only one dial. Then change only that variable and build your equation with that in mind. That's always helpful to me, and I hope that would be helpful to you. Remember that actual price is only used when we're computing a price variance. For all other variances, we hold price constant at its standard level, okay? All right. And then use the structure you're comfortable with. I'm going to show you a visual structure that you might find helpful, but the truth is, for many of these variances, there is an algebraic simplification that if you have in your mind and you're comfortable with, great. It can make things a lot faster. But I wouldn't sacrifice accuracy for speed. If you're not comfortable with the algebraic simplifications, then especially with the time pressure mounting on you in the moment, you might make a little slip up. We'll show you both, but my big advice is to use the structure that you're comfortable with for answering questions like this. All right, here's a revenue variance or a sales variance question that we're gonna practice on. All right, assume the actual sales volume is 69,000 units. Budgeted sales volume is 70,000 units. The actual sales price is $6 and the budgeted sales price is $6.50. What is the sales volume variance? Okay, sales volume variance. Well, before we even plot any numbers, let's build ourselves a little structure. This is a way that you might find helpful. On the far left side of my structure, I'm going to have actual quantity times actual price, or in other words, actual revenue, actual total revenue. In the middle, I might say, well, what if I sold the actual quantity at the expected price? And then over on the far right side, I say, well, what if I what is my true budgeted before the period even started, total revenue. What is the expected quantity times the expected price? The sales volume variance, hopefully you're seeing, is going to be the difference between the revenue amounts on the difference between those two revenue amounts on the right side of that framework there. The only dial that turns is quantity or volume, picking the difference between actual quantity and expected quantity at the expected price. Well, let's start to populate with some numbers. Actual sales volume, AQ, is 69,000 units. Expected price or budgeted sales price, however you want to think about it, is $650, and that's $448,500. Meanwhile, I expected to sell 70,000 at $650, or in other words, I expected to have total revenue of $455,000. The difference is the sales volume variance. That's $6,500. Why is it unfavorable? Well, it's not hard to see that I expected to sell 70,000 units. I actually sold fewer than that, 69,000 units. So naturally, the variance there is going to be unfavorable. So the answer there is A, the first one, and away we go. Now, I could move on, but while we're here, why don't we just say, is there more we can do with this? Could I calculate the sales price variance from this information? Sure. Actual quantity was 69,000. Actual price was $6. That's $414,000 of actual revenue. The difference between that and the $448,500, you can see that the only dial that's turning is the price, actual price and expected price. And it turns out I came in under on the price variance to the tune of $34,500. Also unfavorable because I sold for $6 when I hoped to sell each of those units for $650. Now, just in closing, can we get there with algebraic shortcuts that might even make our lives a little easier and make our exam a little faster? Yeah, we can. The sales volume variance is the dial that turns, put that in parentheses, AQ minus EQ, or actual quantity minus expected quantity. Pull that which is constant out, that's expected price. And I get 69,000 minus 70,000, that difference times 650 is 6,500 unfavorable. You can see that I've gotten there directly when up above I calculated two amounts and took the difference between them. You get to the same answer, but the algebraic simplification gets you there perhaps a little more quickly. It can do the same thing with the price variance. The price is the dial that turns there, so that's what goes in the parentheses. $6 minus 650 per unit times the actual quantity of 69,000, and I get to that 34,500 directly. So the shortcuts work, the little framework visual up above works, whichever way you're more comfortable with, that's what I encourage, but you get to the same place as long as you are turning the right dials and have a firm conceptual understanding of how these variances are computed. All right, here's another one. Oh, this one's a little bit messy. This one gets us into mix. Sauce It Up Incorporated uses the following standards for a single batch of pasta sauce. So it looks like we have onions and tomatoes, 5 pounds each at $2 per pound and $3 per pound for total cost there. So those are all standard amounts. Now we get to some actual data. In the previous month, 100 batches of sauce were produced with the following actual ingredient usage. So it looks like we used 600 pounds of onions, 900 pounds of tomatoes to make that 100 batches of sauce. And it's asking what the direct materials mix variance for the month is. All right. Well, the first thing I'm going to think about is the mix variance. Well, what's the dial that's turning? Well, the dial that's turning is mix. That's obvious. It's in some sense, it's self-defining, right? The mix variance varies the mix in this way. So it is the difference between these two cost equations. Actual quantity times the mix of each ingredient at its standard price at actual mix, and actual quantity times the mix of each ingredient at standard price at the standard mix. And you can see again, only one dial is turning, or only one variable is different between those two equations. So the first thing I want to notice here is that I can calculate mix at standard and at actual. Onions standard were 5 pounds out of 10 or 50% for a single batch of pasta sauce. Tomatoes are the other 5 pounds. Now, don't get tripped up by the fact that the actual data is given in total rather than on a per batch basis. It doesn't really matter. I'll show you that here in a minute, but it looks like of the 1,500 pounds of materials we used, 600 of them were onions and 900 of them were tomatoes. So I need those numbers to get these mixes that I'm going to put in these equations. And you'll see in the equations down here at the bottom that I've got the summation signs and the subscripts. And I need that because if I have multiple material inputs or multiple labor inputs, then I'm going to need to do a few equations and sort of net them together. Let me show you what that looks like. So for onions, the equation calls for actual quantity. Actual quantity of what? Well, in this case, total actual quantity of materials, right? There's no subscript on that AQ term there. So 1,500 pounds of materials times the actual mix, which I'm getting here as 600 over 1,500, right? 600 of the 1,500 total pounds were onions. And that standard price is $2 per pound, and I get to $1,200. For tomatoes, it's the same, except that I'm multiplying that 1,500 actual quantity times the tomato mix, which is 900 over 1,500 or 9 over 15 or 60%. You can think about it any of those ways. It's all the same. But tomatoes were $3 a pound at standard, and that's $2,700. So that cost, that sort of hypothetical cost, is $3,900. The other side is over here on the right, 1,500 pounds times the standard mix, which for onions is 5 over 10 or 1/2 or 50%. However you want to think about it, it's all the same. $2 for onions, and I get 1,500. For tomatoes, it's the same, except there's the standard mix, also 50% at $3 per pound. And I sum those all together, and I get a cost of $3,750. Well, the difference between them is the mix variance, or the amount of the should say the efficiency or usage variance that is explained by deviating from the standard mix. $150 unfavorable, and it's answer B. Now, why is it unfavorable? Well, ultimately, it's because we used the higher input or the higher cost input, tomatoes, in a higher mix than was expected. And so that's why costs were higher in the hypothetical cost on the left at actual mix than the hypothetical cost on the right at standard mix. So that's why it's unfavorable. Now, could we use the algebraic shortcut here? Yeah, of course we could, right? Let's first notice that we could take the standard mix, we could calculate the standard mix as 40% for onions and 60% for tomatoes. That's the 6 over 15, or the 600 over 1,500 and the 900 over 1,500. Meanwhile, the actual mix, oh, I've got those, my friends, I've got those reversed. I'm sorry. What I've got there above should be the standard mix. That should be S%. Oh, I'm just seeing that now. I apologize about that. The standard mix is 50% onions, 50% tomatoes. Hopefully you're with me on this. And it's the actual mix, that should be A%, where it says S%, is 40% onions and 60% tomatoes. Well, armed with that, can I do the shortcut? Yeah, the shortcut says put only the dial that turns in the parentheses, and its actual quantity times the difference in mix times the standard price. First for onions, then for tomatoes. The onion mix variance is actually favorable because our actual mix was less than 50%. But the tomato mix variance is unfavorable because we used more tomato. We had a higher tomato mix than the standard, 60 compared to 50%. And the net effect there is $150 unfavorable, which I already calculated. I'm just showing you can get to the same place, perhaps a little faster with that, with those algebraic shortcuts, and you get to the same place, $150 unfavorable. I apologize about the mistake on the mixes. Hopefully you're all with me on that. Don't do that, by the way. Don't do that on the exam. All right, let's move on. All right, next topic is bonds. Here's some reminders about bonds. Remember, a lot of the questions on the CMA exam will be about the valuation of bonds. And that's going to require you to understand the time value of money and take the present value of future amounts, both interest and face value, calculate those present values, discount them into today's dollars, and add them up, right? So the way that we value is to take the present value of interest payments on a bond, add it to the present value of face value. Both of those calculate present values by discounting at the market rate of interest. And that's the key point that might throw you off. And this reminder, if the required rate of return is higher than the coupon rate, in other words, if the market is demanding more than the bond states as its interest rate, then that bond is going to sell at a premium. If instead the market is demanding less than the stated rate on the bond, well, then that bond is going to sell it as a premium, at a premium. That's intuitive, but it's going to help you to remember that and to have that quick in your mind. Let me show you an example. A 15-year, 8% annual pay bond has a par value of $1,000. Okay, so I already know the coupon rate or the stated rate on the exam is 8%. What should this bond be trading for if it were being priced to yield 9% on an annual rate? So another way to say that is the market is demanding 9%. This bond is paying 8%. So what is the bond's value, or what should it be trading for out in the open market? Well, the first thing to notice is that the 9% market rate is greater than the 8% stated rate, or in other words, the required rate of return is greater than the coupon rate. Therefore, the bond will sell at a discount, meaning it will sell for less than its face value or its par value, which is $1,000. Well, the minute I know that, I can eliminate two of the answers. It's not going to trade for 1,000. It's certainly not going to trade for more than 1,000. Therefore, A and D are not going to possibly be the answers. I've eliminated half the problem. And so I'm feeling pretty good about that, but I still have to solve it. So let's show you how to do that. The first is to take the present value to compute the present value of the face value. The way I do that is to say, okay, it's $1,000 times the present value factor that I get from the tables or from my calculator for 15 periods at 9%. Hopefully you're seeing a 15-year bond, annual pay, discounted at 9%, right? Discounted at the market rate. That present value factor from the tables or from your calculator for present value of $1 is 0.27454 times $1,000, 274.54. Great. I'm halfway there. Then I got to calculate the present value of those interest payments. Now, what are the interest payments? Well, the interest payments are the $1,000 times the coupon rate times the stated rate. That doesn't change just because the market rate is different. So be clear about that. The first piece of the equation is the $1,000 times 8% or $80. That's $80. That's what the bond is paying in interest. But when I discount that into today's dollars, I'm going to take the present value of an annuity for 15 periods at 9%. So in both cases, the present value of the face value and the present value of the interest payments, we discount those into today's dollars using the market rate. The interest rate is 8%, but the discount rate is 9%. Don't get tripped up on that. Hopefully this is clear to you. Well, that's $80 of interest times the present value factor from the annuity table, 8.06069, $644.85. You add those up, and it looks like the value of the bond is $919.39. That's the price at which the bond should be trading in the open market, given this information. And the answer there is C. Okay. All right. Okay. We're doing good for time, but we're gonna do a couple more, and then we're gonna have some Q&A. Okay, the final topic that I wanted to just touch on today, and you'll see we're going really fast because we've only got an hour, is marginal analysis, or decision making, where it's important to distinguish between information that's relevant and information that's not relevant. That's the hard part in these kinds of questions, okay? So what kinds of decisions are these? Well, should I keep or drop a product line? Should I make this particular part in-house or should I outsource it? Should I accept or decline a special order? Should I replace equipment or keep it going instead of replacing it? Should I sell a particular product as is or should I process it further? These are all kinds of decisions that companies make all the time, but that we need to be very clear on what information needs to be considered and what information does not. So the key point here is to identify relevant or marginal or incremental revenues and costs and ignore everything else. So a CMA exam question wouldn't be worth much on this topic if it didn't give you some information about costs or revenues that are in the past, or costs that are sunk, or costs or revenues that are constant across alternatives. These are not relevant. These should be ignored because they're going to be incurred under either of the two options that you're considering, okay? And then the other reminder is that if one of the options requires or pushes an organization up against a capacity constraint, well, that means there's likely to be some opportunity cost, and that needs to be included in the calculation, right? Opportunity cost means by doing something, there's something else that I now cannot do, and there's a cost to that needs to be considered there. Okay. Okay. Couple of practice problems here with the time that we have left. Here's one. A company has a process that results in 24,000 pounds of product A that can be sold for $8 per pound. An alternative would be to process product A further at a cost of $160,000 and then sell it for $14 per pound. Should management sell product A now, or should product A be processed further and then sold? So a couple of things here. One is, this problem is quite easy. It could be made harder if the problem said the process that results in 24,000 pounds of product A costs $20,000 or $100,000. And including that information might tempt you to think, oh, that $100,000, I need to do something with that. I need to think about that. The truth is, whatever the process is that results in 24,000 pounds of product A, that cost is going to be incurred whether I sell product A for $8 or if I process it further and sell it for $14. So whatever that process costs is constant, whether I process product A further or not. Therefore, it's not relevant. This problem has not even made us go there because it hasn't given us any information there, but it could. And on the CMA exam, that wouldn't surprise me at all. And you would have to be savvy enough to go, oh, they're telling me it costs $100,000, but that's not relevant. I don't care. I'm not gonna consider that in answering the problem. Okay. So this was rather easy, and that's good because we don't have a lot of time. There's a few things we want to talk about before we're done here today. So let's just do it. Let's say the first thing to do is, what's the marginal revenue? In other words, what revenue is added if I do this alternative process where I process product A further and sell it for $14 per pound? Well, on a per unit basis, I'd make 14 instead of 8. That's a difference of $6. Times each of those 24,000 pounds, that's marginal or incremental revenue of $144,000, meaning that's $144,000 I would make in one world, process further, that I wouldn't make in the other world, where I just sell it as is at $8 a pound. But there's also some marginal cost, right? I'd have to incur cost of $160,000 in order to live in that new world. And that cost is higher than the marginal revenue. And so living in that world would actually make me worse off by $16,000. So what I ought to do is sell product A now, don't process it further, because I will be better off by $16,000. And the answer there is B, okay? So this problem could have been made harder. Still a little bit tricky. You got to think about what the marginal revenue is and compare that to the marginal cost and ignore everything else. All right, here's one more, folks, and then we'll talk about a couple other things and be done. Able Company produces 3 versions of baseball bats: wood, aluminum, and hard rubber. A condensed segmented income statement for a recent period follows. So you got wood, you got aluminum, you got hard rubber, and you got total there on the right. Great. Assume none of the fixed expenses for the hard rubber line are avoidable. What will be total net income if the line is dropped? Oh, this is a great question. It's a great problem. Because if you're not keen on cost behavior and the dangers of fixed cost allocations, the simple student will look at this and go, oh, well, if the hard rubber line goes away, it's losing $15,000. So naturally, if it went away, total income would go up by $15,000. And the answer is A, $125,000. Hopefully you're with me in recognizing that that is not the right way to think about it, right? So the $15,000, fine. And if you're not careful, you're gonna look at that and go, oh, we are in fact losing money on the hard rubber line. If you think about it for a few seconds more, you're gonna go, wait a second. If the fixed expenses are not avoidable, none of the fixed expenses are avoidable, then that $22,000 fixed expense is deceiving me. And taking that $132,000 of fixed expense and allocating it to wood, aluminum, and hard rubber is deceptively causing me to think that if the hard rubber line went away, that those $22,000 of fixed expenses would go away. But they won't, because they're fixed and they're unavoidable. So better to ignore that $22,000 because it's not relevant. Not relevant. That cost is going to be incurred by the company as a whole, whether you have the hard rubber line or not. So what really matters, is the $7,000 of contribution margin. That is the combination of $65,000 of sales that would go away if the hard rubber line went away, and $58,000 of variable expenses, which would also go away if the hard rubber line went away. But the $7,000 of margin is the only amount that would truly go away if we drop the hard rubber line, and that is the marginal change. That is what would be lost. So the truth is, if we drop the hard rubber line, net income for the firm as a whole would not go up. It would actually go down by the amount that is relevant, $7,000. So 103 would be the new net income, and answer B is the right answer. Okay. Very fast. Hopefully you were able to stay with me through all of those, and hopefully that was helpful. But what I want to tell you is that what we just did is just a very, very small sampling of what I do in Wiley's 11th hour review product. So what I've done is to identify about 40 or 45 different topics on the CMA exam that we call hot topics. So we consider topics that are likely to be tested on the exam and often particularly challenging. And I filmed a video of 20 to 30-minute video on each of those topics. Here's the list of those topics, in which I discuss some tips and reminders for each of those topics, and then work practice problems. Not all that different from what I've just done for the last half hour or so with you friends here. And it's a product that I'm actually very proud of, and that I think could add a lot of value to anyone who is in preparation, perhaps in the final stages of getting ready to take the CMA exam. The 11th hour review product, it's available as a standalone product, but it's also available as part of the Platinum CMA exam review course that Wiley has. And I'm gonna turn it back over to Julie now to talk a little bit about that.
Yeah, thank you, Steve, and thank you for that presentation. You covered a lot of ground very quickly, and
too much.
Problem solving. And FYI, I'm posting a couple of links in the announcement section, one to the Wiley CMA 11th hour review product that Steve just talked about, as well as the Wiley Platinum CMA review course, which you can see on screen right now. So the 11th hour course that Steve discussed is really designed for students in the last week or two to give you a hyper-focused review right before the exam. The difference with the Platinum course is it's designed to be your full solution throughout your entire journey. So, and the Platinum course includes that 11th hour product that Steve talked about. So real quickly, I'll just tell you a few features about this course. First of all, we're running a sale right now that provides $500 off. So it is $1,000 for both parts. So that's a pretty good deal that we're running right now. Couple of other important things to know. You get unlimited access to the course until you pass the exam, and that includes any content updates that may take place during your studies because the exam does change over time. The content is all aligned to the learning outcome statements on the CMA exam, so you get over 40 hours of video lectures. You get 5,000 multiple choice questions, 70 essays, 750 flashcards. You also get the CMA study guides that are printed, and those are mapped perfectly back to the courseware. As I mentioned, you get the 11th hour review course. We also have recently launched live online classes that work in companion with the course, and I believe those are starting in July of 2022. So those are 6 weeks courses that guide you through the content with a live instructor. And then finally, you get access to our award-winning learning platform, which includes tools like the new score predictor, which is a really cool new tool. It predicts how you're going to do on the exam based on your performance in the course. So you can get a pretty good sense of, how you're progressing and how ready you are. You get access to the Ask an Instructor feature where you can post questions to a live instructor. You get access to a mobile app so that you can use all of these tools on the go. So if you want to, yeah, Steve, if you would advance to the next slide, I will post a link to the free trial where you can go and take a closer look at a portion of the Platinum CMA review course and find out if this might be a good solution for you as you're preparing for the CMA exam. All right, I think it's time to take a few questions from the audience. We've had a few questions coming in throughout the presentation. If you have any questions as we're taking these, please keep them coming in the questions box, and we'll take as many of them as we can get to. Steve, are you ready?
Yeah, I'll answer any question to which I have an answer.
Okay, and those that we don't have an answer to, we'll research the answer and we'll get back to you by email.
All right.
So a question that came in right at the beginning was from Raymond. It was about faculty members, and he's heard that faculty members can take the CMA exam at no cost. Is the rumor true, and what do you know about that?
Yeah, the rumor is true. I think that's a decision the IMA made just a few years ago, which I think is a really good call. I know that certainly it gives me credibility and excitement to encourage my own students to think about the CMA because I am a CMA myself. So it's been a benefit to me for lots of reasons, and that's one of them. But yeah, I think if you were to look around on the IMA website or even just find an email and shoot it off to somebody, you would get you'd get all the information you needed on that. But the short answer is yes. I'm almost totally positive that is true.
Yep. And we talk all the time with the folks over at IMA. They have a faculty, someone who coordinates with faculty named Mary, and I believe we provided her contact info in the questions. So if anyone else is interested in that, post a question and we'll share her email with you. All right, this next question is also from Raymond, and a couple of different questions, and this might be, we might need to share a resource with you online. Where do you sign up to take the exam, and what is the window between signing up and the actual exam when you actually sit for the exam?
Yeah, so the I mean the IMA website, which is imanet.org, imanet.org, is where you would find all the information about the CMA exam, about the timing windows, testing locations, costs, or no cost in Raymond's case, and you know, further breakdown, certainly than anything I gave here on the exam topics and the weights and how it's scored and so forth and so on. So, you know, I would encourage anybody to just explore there. It's a very, very long, you know, frequently asked questions document that I have referred to numerous times in trying to answer my own students' questions or point them to that document to get the answers themselves. My understanding is that once you enroll in the CMA exam program and become a candidate, that you have 3 years from that time to take both parts of the exam.
Okay. And is the exam administered online, or is it online remotely, or is it in central locations?
So this is a great question. I think for a long time it was administered online at locations, right? Testing centers. So Prometric was a company that had locations all over the place, and they had contracted with IMA to host the CMA exam. That's where I took it. This was back in 2015. During COVID, I think the CMA exam was offered to students as an in-house, you know, digitally proctored exam that you could take at home on your laptop. I don't know if that has been withdrawn now that COVID is sort of declined so much. I don't know the answer to that, but I think for a time it was and may still be.
Sounds like an ever-changing situation, so definitely contact IMA and Prometric about that to get the latest. Next question is from Anna. Is it possible to get testing accommodations? That might be a question that we need to follow up on with you, Anna, check with Prometric on that.
Prometric or the IMA. It's a great question. I just don't know the answer.
This next question is from Thu, and this is a pretty broad question, but I know you have the answer. What is the content you need to study to pass the CMA exam?
Yeah, I mean, that is a broad question. Again, what I touched on at the beginning of my presentation here was a listing of the topics that are tested. So that would be the starting point. But again, if you were to explore the IMA website and the documentation that they've provided, there would be far more detail. I mean, obviously a prep package for somebody who's sort of new to the whole area is something that I would recommend, Wiley or somebody else. I'm biased towards Wiley, of course, but that would be the best way. One of the interesting things is that you need a degree to take the CMA exam, but it does not have to be an accounting or a finance or a business degree of any kind. So one of the reasons that the pass rate is globally sort of low, our pass rate here at Wiley is much, much higher. But one of the reasons for that is that you have people with no background in accounting or finance or business signing up to take the CMA exam. And that's great. That's a great thing. But it does mean that in terms of preparation, students are often starting from scratch, and that's not as true for perhaps some of the other exams. So, you know, if you have a background in accounting and finance, like I say, corporate finance, cost and management accounting, those sorts of courses are sort of really well positioned to prepare you for much of the CMA exam. But in the absence of any background there, you know, a review product like Wiley's is probably the best place to start in your preparation.
Okay, thank you. Well, the questions are coming in fast and steady now, and so we only have 1 minute left. So we're going to take one more question, and we'll follow up with the rest of you by email. And of course, you can always contact us at the email address on screen if you want to get in touch with us directly. So last question is from Garrett. This is a great one. Is part 1 or part 2 easier?
So great question, Garrett. I will say the pass rate on part 2 is significantly higher. It's not for me to say if that means it's easier, but I mean, that could be for a lot of reasons. It could be easier, or it could be that most students take part 1 first, and maybe they do well, maybe they don't, but they learn about the exam so that they're more equipped for part 2. So they do better on part 2, even if part 2 is no easier than part 1. I suspect both of those are at play. Perhaps the second more than the first. It might actually be that part 2 is easier. But I think in the US, you've got about a 48% pass rate on part 1. And it's like 63% pass rate on part 2. I think if I'm remembering the numbers I've seen, worldwide, those numbers are going to be a little bit lower. But in every case that I've seen, whatever the breakdown is, part 2 performance is higher than part 1. Again, does that mean it's easier? Maybe. Maybe.
What was it for you personally, Steve?
What's that now?
What was it for you personally? Which section did you find easier?
Oh, that's a good question. It's been long enough that might be hard for me to remember. I did about the same on each. I can say that. But it may be that part 2 was a little easier. Now, again, when I took the exam, it didn't have the analytics piece in it. Some of the weightings were different than they are now. So the exam was slightly different, not too much, but slightly different than it is now. So that's a change. But I think I would probably say part 2 I found a little bit easier than part 1. But again, that could be that I took it second. Maybe that's why. Yeah.
All right. Well, thanks for sharing your perspective on that. Thank you so much to everyone who was here today, and we will send out the recording in 24 hours, and we'll follow up with all of the questions that we didn't get a chance to get to. Thanks for the great presentation, Steve.
Thank you, and thanks to all my friends out there. Good luck. I'm with you. I'm with you in spirit. I love you. I honor you. You're going to do great. I know it.
All right. Have a great evening. Good night.
Thank you.